All right. Happy Monday morning. We've got a Monday market update. I'm Matt Gougé, Matt the Mortgage Guy, with UMortgage. Unfortunately, I don't have my esteemed co-host, Mr. Sean Grapevine, today. He's got some other stuff going on. Hope everything is well with him. But what I will do is educate you today. So stay tuned, because I think today's episode is important. As much volatility as we've seen in mortgage interest rates, I think that I've got something to teach the average viewer today. And the good news is I've got nothing to sell you. I've got no funnel and click through to a course. So I get to tell you the truth, which isn't all that common in today's market. And if you look at some of the marketing that was out there last week, it's proof to my point, right? That people are only going to create content. They're only going to create articles. They're only going to create things that entice people to pick up the phone, to buy something, to get themselves pre-approved. Fortunately for you, if you're listening, you get raw, unfiltered, honest advice. And the honest truth, I'll spoil the punchline for everybody here, is that as much as we saw rates come down Friday, August the 2nd, and then that following Monday, August 5th, last week between Tuesday and Thursday, we erased all those gains. So if you're like most people that was watching real estate agents and loan officers and everybody post, you saw a post on Wednesday or Thursday about interest rates coming down and the housing market is back alive and you're back to where, you've got 15% more purchasing power, or the payment on your home is going to be $300 less because rates are down. By the time that news got to you, by the time most people were talking about it on Wednesday or Thursday of last week, those gains were already erased. And to keep it simple and just talk just rate terms, and then we'll get into some numbers, that 30-year fixed rate as published by Mortgage News Daily, which is a good kind of average, even though it's a little bit low, to be quite honest, because it's based on paying a point. It's based on somebody with 800 credit score and 30% down. That went from roughly 6.7 or 6.8 to 6.3 or 6.4 by Monday, August 5th. And then by Thursday, August 8th, it was back up in the 6.6, 6.7 range. And so the moral of the story, and here's the takeaway: rates move quickly is one thing. And so today's rate isn't yesterday's rate. And the other moral of the story is you can't believe everything you hear. And this is something that I'm seeing a lot in the refinance market and the purchase market. If you really want good quality info, you've got to find somebody you like and trust, because there's going to be so much, I wouldn't call it disinformation or misinformation. I would just call it fancy marketing all across the interwebs. If you Google mortgage interest rates today, you're going to find a lot more flashy stuff, because quite honestly, flashy stuff is what sells. So with that out of the way and the lesson being learned, let's look at what we've been looking at the last few weeks with the Fed Watch tool. And if you haven't seen it yet, we're just plugging in, and anybody can do this. You can Google Fed Watch tool, and you'll get this chart that is a probability of the Fed cutting mortgage interest rates. This first one is September. Their next meeting, I believe it's September 18th. A lot of people think that they're going to cut. And, you know, people are so certain that if you look at this chart, there's a 50 some odd percent chance that they're going to cut 25 basis points. And then there's a 47% chance they're going to cut 50 basis points. There ain't no probability, or there's no place in this chart for them not cutting at all, which is pretty wild because there's still a lot of time, right? We still got 5-6 weeks until September 18th. So who knows? Something happens. You know, we get a bad inflation reading. I think there should be some probability here that the Fed is going to stand pat and not cut rates. But everything they've said, everything we've seen, how close we are to their quote unquote 2% target leads, quite honestly, most everyone to believe they're going to cut. It's just a matter of how much. And so I've seen a lot of stuff around this as well. And so I want to clarify for people, the Fed cutting the Fed funds rate doesn't necessarily mean that mortgage interest rates go down, but they move together. And as the Fed starts cutting interest rates, here's what I think people should take into consideration. This is already a known thing. The mortgage market more than likely already has the fact that like a September rate cut is baked in already, kind of baked into the interest rates. It's not going to be a surprise. Where mortgage interest rates move more than anything else is when there's a surprise jobs number, surprise Fed cut, surprise this. This stuff is already known. They've talked about it. There's a high probability that there's going to be a cut. And so when this cut happens, don't expect to call a loan officer and say, okay, the Fed cut rates, where are we at today? It's likely not going to move the market. But what it will do when we start to cut mortgage interest rates, the Fed, right? When Fed starts to cut the Fed funds rate, what that is going to signal to the market, one of the markets being the mortgage interest rate market, is that this cycle of cutting has started, because they don't just cut once. They don't just cut and then sit on their hands for 3 months or so. There was 11 rate hikes to get us to this 5.25 to 5.5 range we're in. There's going to be 5, 6, 8 rate cuts over the next 12 to 18 months. Some think we'll have 2 or 3 before the end of the year. That's still up in the air, but it's probably going to be at least 2. Then the first half of 2025, 2, 3, or 4 more, right? And as this cycle kind of unwinds, mortgage rates will undoubtedly follow. You know, without getting too granular, there's a spread between the 10-year treasury and the 30-year fixed rate mortgage that's going to start to tighten and get smaller. So we can look out too on this Fed Watch tool, and we can look at what they're saying for the next Fed meeting and how likely it is to have cuts there. I think it's on the next slide because we got 3 meetings left. So this one, if my old eyes can zoom in, I think we've got something like, you know, the highest probability is that one in the middle, which is 50 basis points lower than we are today. So either we get 25 in September and 25 in the subsequent meeting, or we get 50 in September and they stand pat in that meeting. I think it's less likely that we got 0 and then 50, but either way, let me see if I can. Oh, that's 450 to 475. Holy guacamole. That's 75 basis points. So they're talking, this is the November meeting date. They are talking, sorry, I got to lean over for my old eyes to see this dang thing. They're talking 50 in September, 25 in November. You know, once they do start cutting, the you know, people that are putting out these guesstimates, these probabilities, think that we're going to have 3 rate cuts by November. So I wonder what December said. Let's check out December's. That is 425 to 450. 4 rate cuts. We got none, and all of a sudden we got 4. So the favorite, if you're a betting person, that's like a 46% shot, is 100 basis points. That's 4 cuts, 4 25 basis point cuts from where we're at today. Then the second place, or the second favorite, is 75, 125 basis points, 5 cuts by the end of the year. How wild would that be? That seems a little aggressive. But either way, the Fed rate cuts are coming. It's just a matter of how many, how quick. I don't think that the Fed is they've shown they're not one for the dramatics, right? I don't think they're going to do anything too dramatic. I think they do 1 in September. They could do 2, and there's a case for 2, but I think that they've been so slow and steady. Let's kind of see what happens. And there's not like crazy, the jobs report came in low. The economy seems to be sputtering a little bit, based on some data, but I think that they're not desperate, right, to go crazy, go gangbusters. So anyhow, that's enough of those numbers. I want to talk in generalities because I think it's helpful for people about not just mortgage interest rates. I think we learned a little bit today on, don't believe everything you hear. Everyone's going to talk about mortgage rates are coming down. There's going to be a lot of ways people use this for marketing, which in some ways it's good, right? I want my past clients to know if you've got a 7.25, you should be in touch with somebody you like and trust, namely Matt, the mortgage guy and team, so that when 6.25 presents itself, you're in a position to say, let's submit that loan. Let's lock it. It's going to save me $360 a month. It's only going to cost me $2,800 in baked in fees. So I'm going to break even in 8 months. This is something that makes sense from a refinance perspective. Let's go. I heard somebody tell me recently, and I love the little saying, and I think it was a military friend of mine from UMortgage. He said, when the target appears, shoot. Meaning, like, don't wait. There's a lot of people that see the target appear, and they've got a 7.25 interest rate, and 6.25 appears, and they know at 6.25 because they've heard from their loan officer, this refinance is going to make sense. If we can get 6.25 at no cost, this is a refinance going to break even in 8 months. It makes sense. That target appears and they go, well, it came down to 6.25. Let's wait a little while and see if we can get 5.99. If you're that type of person, if that was your mentality, you done effed up this past week, because Friday, August 2nd, Monday, August 5th were great days. Mortgage rates came down 0.5 point. A lot of people, the target appeared for them. You know what happened Tuesday, Wednesday, and Thursday of last week? The target disappeared, right? Next time that target appears, be ready. One of the ways you're going to be ready is reach out to a loan officer. If you're watching something like this and you're paying attention to mortgage rates, mortgage loan officers love that, because you've got a little bit of a finger on the pulse, and you can reach out and you can say, hey, Matt, I've been watching things. I don't know if it makes sense right now. I mean, I've got people that are contacting me about VA IRRRLs that are low 6s or high 5s. That doesn't make sense for them yet, but kudos for paying attention already, because we'll wait until we get something VA in the low 5s or high 4s. That's the target for you. When the target appears, shoot. And so just be aware. It's crazy to me. I remember talking about this in 2019 and 20 as mortgage rates started to come down. It blew my mind, the number of people that would sit on hold with DirecTV for 37 minutes to get a free NFL package, to save $13.99 a month, to combine HBO and Showmax and their new promotion, and they'd save $14, right? And it only takes 5 minutes. Hey, Matt, I don't know if it makes sense yet. Can we take a look? Oh, sure. Send me a copy of your latest mortgage statement. Tell me a guesstimate of your credit score, and let's take a look. I can pull an automated value of the property worth $600. Your payoff is $432. I can put together a scenario. I can price it based on your guesstimate of your credit score, and I can tell you, here's exactly what it looks like. It's a 21-month break even. I don't know if it makes sense quite yet. This is kind of a yellow light situation, or you're saving $385 a month. It's only going to cost this much. Remember, refinance costs. It's either baked in to the loan, baked into the rate, or paid out of your pocket. There's no free lunch here, right? But you look at that and you say it costs $3,400. I save $340 a month. I'll break even in 10 months. It makes sense. I should do that. And for some people that want to wait until the absolute rock bottom of interest rates, don't do that either. Because you might save $340 a month now. Over the next 18 months, if it cost you $3,400 baked in and you've saved 18 months times 340, you've saved an extra $3,000, and then a new target appears where you can refinance again. And that way you're more likely to catch the bottom. Plenty of people in 20 and 21, I refinanced twice. I refinanced them from 4.875 down to 3.99. And then again from 3.99 to 2.75. Both times it made sense. The first time, it saved them $375 a month. And they were in that loan for 12 months. And then after 12 months, 2.75 appeared. The target appears. Let's shoot, right? Then they saved another $405 a month. And that's the loan they're in now. And they're probably going to stay in it for as long as possible, because 2.75 is a sweet, sweet interest rate to borrow large sums of money at, especially against an asset that's appreciating. So it's a good play to own an appreciating asset that has debt on it that is fixed. The debt stays the same. And here's a little quick tidbit for people. You know what's going to happen in 5, 10, 15, 20 years to some of these mortgages that people have a fixed rate on that are $1,500, $1,700, $2,100 a month? You know what the average rent is going to be? Or maybe they keep it as their primary and they're just happy because the neighbors that are buying homes in 2035 are not only paying double, but they're paying a higher interest rate and they've got a $6,800 payment. That's how you find these neighbors in your neighborhood that are like, oh, darling, my mortgage is $663 a month. They took fixed rate debt. It stayed fixed. The property kept appreciating. Rent kept going up. Average mortgage kept going up over time. And they held it. Real estate held over a long period of time is a win. 100% of the time. Name me a 30-year period where someone held a piece of real estate or a mortgage on the residential side and they lost. You can't. You won't. It's hard to find a 5-year period. I think there is only one 5-year period that you can find. And I bet you could guess when that 5-year period is, right? It's buying in 05 and then exiting in 2010 or 04 to 09. It's those ones. Maybe the thing I'm thinking about is a 10-year period. And there's only 10-year period where the entry price is higher than the exit price. One 10-year period in the last 100 years. So all that to say, mortgage interest rates, as they come down, you're going to have to pay attention as someone who has a current mortgage and is looking to refi, and also as a buyer. Here's a quick side note, which I think is really interesting. I'll get to your question, James Walsh. I just saw it pop up. Diana Olick, CNBC, 2014, 15, 16, 17, 18, 19, 20. Crash, 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 crash. Real estate's crashing. If you look up Diana Olick market crash, Diana Olick real estate crash, I guarantee you can find 100 articles, 100 videos. This lady is absolute bear when it comes to residential real estate. I saw something, I almost fell out of my chair last week. She talked about how if mortgage interest rates come down, it's going to have upward pressure on prices. It was so accurate and so off from what she normally says, I had to watch it 2 or 3 times to make sure it was Diana Olick actually talking. She was making sense. I know it because I've got 87 clients that are pre-approved. I know how the average consumer behaves. I can get a lower interest rate. I'm going to take another look. I didn't think I was going to buy because $4,400 was a little bit too expensive. Mortgage rates are down. I can put together that mortgage at $3,950. I want to do that. I want to stop renting. Renting's $3,400 a month, and it hurts me to pay that every month. So Diana Olick, I think I put that up my TikTok. That was great. Matt, excellent information. Thanks. Currently at 699 on my primary, $500K loan, closed 5/31/24. Off the top of your head, what's the target rate before I give you a call? Thank you for this question, James. And I think that there's a couple things to consider. One, you're going to have a target interest rate that's going to save you a certain amount of money. But two, and as important, a price for that interest rate. Because if you called in today, I guarantee you this, you call into Rocket and say, I'm thinking about a refinance. I got a 6.99. They 100% are going to have a product for you. And they're going to say, James, your credit score is only 737. I don't know. It's a guess, right? But we've got a 5.99%. It's going to save you on a $500,000 loan, 1%. Let's call it 5,000 a year. Let's call it $400 a month. Might be a little less because loan amount changes and whatnot. But if they charge you $7,700 for that 599, and then there's title fees, there's an appraisal needed, and it's $10,000 in costs, I would tell you, you probably don't do that, baking $10,000 in cost to save $400. And in Rocket's case, in some of these big online shops where they've got, call centers just buzzing all day, you're likely to get enticed with a sweet rate, but then a lot of baked in cost. And so at that loan amount, $500,000 is a big enough loan amount where you don't even necessarily have to save 1%. You might get to 6 1/8 or 6 1/4 and have enough savings to justify it. But the key thing, James, is the break-even analysis. You want to do a refinance when high fives or low sixes appears, and it appears at little to no cost. And when I say little to no cost, box A of a loan estimate is going to have underwriting, processing, points to the lender for that rate. When you do a purchase or do a refinance, when I type in your home value, your credit score, the loan purpose, which in this case is rate and term refinance, I'm going to have a whole rate sheet. I'm going to have 5.25, 5.375, 5.5, all the way to call it 6.5 or 7. If the 599 costs 0, the 5.5 cost 1.25, which would be 1.25, $6,250, $6,000. You've got to put that in to a break-even analysis. I'm happy to do it. I do it for everybody. If you go to greatmortgagebroker.com and you've got a refinance to look at, I'm doing break-even analysis for anybody who's looking at it from a refinance perspective. That cost, again, it could be baked in. It doesn't necessarily have to be paid out of your pocket. And somebody goes, oh, there's no cost, nothing out of your pocket. Well, it costs, right? It's baked into the loan. Your payoff was $498. Now your new loan is $507. $9,000 baked in there. Some of it I don't consider cost when you're prepaying your tax and insurance and you're getting a refund of the old escrow account. That's not a cost. That's something that's going to be paid anyway. But lender fees, appraisal, if there's title fees, all that stuff is true cost. And that versus your savings gives you a break-even analysis. If it's less than 12 months, green light all day, every day. If it's 12 to 24, it's probably yellow light. Consider it. There might be other factors that tip the scales one way or another. If it's more than a 24-month break even, I don't think that's something that you want to fire on. And in your case, right, where we might say $400, but it costs you $10,000, 25-month break even, I would say pump the brakes. You're going to find that today. I promise you. I wouldn't do it, right? Every single thing that we see shows mortgage interest rates are headed down. And so come November, December, January, James, I think you'll be in a great position. 599, 6 1/8. Get in there, have a less than 12-month break even. That rate might cost 0. You might have appraisal and some title fees, and all in, it's $3,100 in fees. you're saving the same $400 a month, you're breaking even in 8 months. Thing makes sense all day, every day, right? And that's pretty much exactly what I did 12 to 14 hours a day in 2019, 20, and 21. Here's a break-even analysis. Here's the link to our application. If you'd love to get started, we'd love to help. And, when it makes sense, you want to press play and go. And another thing to consider is you want to press play and go with someone who's going to deliver on their promise. Not everybody delivers on their promises, unfortunately. So thanks for the question. I appreciate it. Kyle, appreciate the kind words. This is the type of stuff that if you're not following Matt the Mortgage Guy on YouTube, please do so. I'm going live once a month in a school community that's my buddy Mike Zuber's, one rental at a time. If you happen to be an investor, you happen to be somebody who likes, information, we're going through loan estimates. We're doing that type of stuff. I haven't been live on the Matt the Mortgage Guy channel, but I'm game to if I get enough people requesting it. So thanks again for watching. Next week, we'll be back with my buddy Sean Grapevine. Hopefully this was helpful. Thanks again for watching. Subscribe to Matt the Mortgage Guy on YouTube, and also subscribe here, UMortgage, this Monday market update every Monday, 8:30 Pacific Standard Time. Me and Sean will be here just keeping you guys updated, giving you real information, honest information like we did today. Thanks, guys. Have a great day.